Hello everyone, this is Sam from the Research and Development Department in Market Equity, and in this video I'm going to be talking about some of the important instruments and their price movement predictions for the day, which falls on a Tuesday, 30th of November 2021. Let's begin with the platinum, where in the previous videos we said that we were waiting for it to rebound upwards off of around level 1009 in order to continue with the overall uptrend in the 4-hour time frame. However, we can see that recently it has broken down through it, which started a downtrend in the 4-hour time frame and in turn was continuing the overall downtrend in the daily time frame. And upon breaking down through level 957 and failing to hold below it, we can see that there has been a divergence not only in the RSI indicator as well as the stochastic oscillator. And due to the presence of this positive divergence, it indicates the probability of rebounding upwards off of around the current levels in order to correct before continuing with the overall downtrend, which in this case, the correctional scenario will extend to retest around level 1001 near the upper band of the Bollinger Bands in the 4-hour time frame. Unless the platinum breaks upwards to level 1001, then we are still moving in a downtrend, and by breaking down through level 957, which resembles a horizontal support level for the platinum in the 4-hour time frame, it will continue to target around level 921 as a primary target in the downtrend in the 4-hour time frame as well as the daily time frame. Another thing to support the rebounding upwards off of around the current levels in order to correct is that if we notice the daily time frame, we can see that the platinum is currently moving around the lower band of the Bollinger Bands, which supports the probability of rebounding upwards in order to correct before continuing with the downtrend, specifically since the current areas resemble level 78.6 Fibonacci of the previous upwards movement, and therefore we will be expecting it to rebound upwards, as we said, in order to correct towards around level 1001 before continuing with the downtrend. In case the upwards correctional scenario extends beyond level 1000 or 1001, then we will be expecting it to retest around the mid-range of the Bollinger Bands around level 50% Fibonacci of the current downwards movement. If we notice the RSI indicator in the daily time frame, then we can see that by rebounding upwards off of around level 30 near the oversold area, it supports the probability of rebounding upwards off of around the current levels in order to correct before continuing with the overall downtrend. And if we notice the stochastic oscillator, then we can see that by moving below level 20 inside the oversold area, it also supports the probability of rebounding upwards in order to correct, as we said. That was it for the platinum. Let's move on to the Canadian dollar versus the Japanese yen. In the previous videos, we said that we were waiting for the pair to rebound downwards off of around the upper boundary of the downwards channel in the 4-hour time frame, which in that case, we said that it will be continuing to target around level 89.70, then around level 88.50. Recently, we can see that the pair has broken down through the lower boundary of the downwards channel, and not only that, but upon retesting the broken lower boundary of the downwards channel in the 4-hour time frame, it has started rebounding downwards off of it strongly, where we can see that it is currently being traded around level 88.40, which resembles a horizontal support level for the pair in the 4-hour time frame, and therefore, due to the current strong movement, and if we look at the daily time frame, then we can see that the movement also suggests a strong downtrend in both time frames, then it's safe to say that by breaking down through level 88.40, the pair will continue to target level 88, then around level 87.20 as primary targets in the downtrend in the 4-hour time frame. If we notice the RSI indicator in the 4-hour time frame, then we can see that by rebounding downwards off of around level 40, it supports the continuity of the current downtrend in the 4-hour time frame. That was it for the Canadian dollar versus the Japanese yen. Let's move on to the British pound versus the Australian dollar. In the previous videos, we said that the pair is moving in an uptrend in the 4-hour time frame, and recently we can see that after it has formed a peak around level 1.8770, it continued to correct towards the Kijun-sen line, where it then continued to rebound upwards off of it. And not only that, but it broke upwards through the Tenkan-sen line, which altogether, due to the weakness of the previous downwards correctional movement, which we can see more clearly in the 1-hour time frame, it supports the continuity of the overall uptrend in the 4-hour time frame as well as the 1-hour time frame, where in this case, it is currently going to be targeting level 1.8770, which as we said is the previous peak formed in the uptrend, and by breaking upwards through it, will support the continuity of this uptrend, which will continue to target around level 1.8960 as a primary target in the current uptrend in both time frames. If we notice the 1 hour time frame, then we can see that the pair has rebounded upwards off of around the Cinco span B, where it continued to break upwards to the Cinco span A, and upon doing so, we can see that the Cinco cloud has shown signs of an uptrend by showing a positive crossover between the two of them. This altogether supports the continuity of the uptrend as we said in the 4 hour time frame as well as the daily time frame. If we notice the RSI indicator in the 4 hour time frame, then we can see that by rebounding upwards off of around level 50, it supports the continuity of the current uptrend in both time frames. That was it for the British pound versus the Australian dollar. Market Equity wishes you successful trading. Thank you for watching and have a nice day.